Good morning, friends. It's Friday, February 3rd. I'm Marv Eisen of Timeless Dollar Trading Academy. And what a week it's been. Following the FOMC report on Wednesday, markets shot up and continued yesterday, Thursday, leaving a 40-point gap between Wednesday's close and Thursday's open. And this gap, this window, will fill. When will it fill? That's the big question. And the question that you want to know as a trader, that we all want to know, the only question, the reason that you read the news, the reason that you get up at 6 in the morning, the reason that you study, the only question you want to know is, where is the market going today, right? That's the only question. Now, to answer that question, there are many indicators for trading that you can use. One of the most important and valuable is the Taylor trading zone, using Taylor's calculations. George Taylor formulated these calculations 75 years ago, and they are as valuable and insightful today as they were back when he developed them. I want to head over to the economic calendar for today. February 3rd, the big news is the non-farm payrolls report. And look at this, friends. The forecast was 187,000 jobs being added to the economy, and the actual number came out 517,000 jobs. Great news, right? It's great news if you know how to interpret it. This is not good news for the bulls because this will incentivize the Fed to keep pressure on raising interest rates. Today is going to be determined by this number, non-farm payrolls report, and this is going to skew my trading zone numbers. Now let's go into my trading zone. I use the trading zone daily. I calculate these numbers, the support and resistance numbers, and I put my the previous day's close. I put a horizontal line to indicate the previous day's close, and these are my target lines. The previous day's close, my calculated support, my calculated resistance, and the range between them. Don't forget the range. This is an important concept. So on Tuesday, the trading zone was 100% accurate. Prices opened at one end, closed at another end, right? On Wednesday, when the report came out, this is what these external factors do to skew market price averages. And so when these numbers are due to come out, when these reports rather are due to come out, I wait it out. I sit on the sidelines because if you guess right, make a lot of money very quickly. If you guess wrong, you'll give away a month of profits like this. Don't do it, especially if you're a novice trader. Don't bet the farm on a Wednesday when the FOMC is going to come out. Okay, so going forward to past Wednesday. Well, past Wednesday, this was Thursday, yesterday, and my trading zone was resistance at 41.60 and support at 40.66. And again, this has been skewed by this. Without this announcement, this doesn't happen. This doesn't happen. And my numbers are 100% accurate. And again, the dust has to settle. The averages, remember, the trading zone calculation is an average of averages. And so when the trading zone doesn't really give me insight, it's not a really good thing for me to incentivize me to trade, because why guess? If I have a tool that's highly accurate, I'm going to wait for a day when that tool is being tracked by prices. And so what will happen today? Now today, here we are, market is trading right over here. And I'm not going to show you my calculated trading zone because I provide that as a subscription. And if you want a 1-week free trial, you can get it at my site at timelessdollar.com. But today, what's going to happen? Well, again, back to the big picture. Big picture is there's a 40-point gap right over here. The market closed yesterday at 41.79. That's the S&P, not the E-mini. E-minis are tracking 41.40 today. And I'm looking at this non-farm payrolls number to have a big impact on the market. And that big impact, I would guess, is to the downside. So we will see what happens today. Again, if you want to be successful as a trader, one of the most important things that you have to know is, A, where is the market going to go today with some degree of assurance, and And if you can't discern that, maybe it's better to sit the day out, right? Because why guess? I mean, there's a good deal of guessing in market action, and you can, of course, trade the price setups. I teach the six trading setups in my course at timelessdollar.com, and you can learn those. There are only 6 trade setups, friends. And so if somebody's telling you that you have to watch 1,000 hours of videos to learn how to trade, nonsense. There are only 6 trade setups. But setups are short-term indication of where prices are heading and to what degree. But the trading zone is a longer-term calculation, and it's, for me, highly useful. And for those who are professional traders who use it every day. So trade safely. Thanks so much for watching. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.